Oh. Hey, Perry. If you can hear me up at the top there, you'll have to unmute yourself there. If you can see it, that's the second blue button from the left up at the top of the screen. Hi, Marilyn. So up at the top there, if you can hear me, there's a row of 4 buttons. The one on the very left, that turns your video on. The next one turns your audio on. Click those buttons up there at the top. Oh, this is gonna be good. Tony?
Yes.
All right.
Hey, Perry.
Perry?
You can unmute your mic at the top.
Yeah. Let me see if I can get this screen to share and I'll show you. Yeah. So let's try this. There we go. There's Marilyn. There's Kevin.
Hello, hello.
Hey, Kevin. I think we're having some trouble here. Can you share your screen and show them where the buttons are to unmute and share their video at the top there?
Yeah, let's see if it will let me do that. Because it gives you this.
Oh, wait, there she is. There's Marilyn.
Mirror.
You got it.
I went back to the directions.
Hey, Marilyn.
We lost Perry. Perry, give up again.
Perry's come back. Hey, Marilyn.
Hey. Hey, Tony. I gotta put my lipstick on. I put the cat up. Close the door. Put my lipstick on.
So Perry, at the top of your screen, you'll see 4 blue buttons, a red button with a phone on it, and then a triangle. Click on the first button. That'll turn your video on the left. And then the second one with the little microphone, click that one, and then you'll have your audio on.
Right above Dave's head.
Yeah.
That's right. Yeah, that's it. Yeah.
That is. Hi, Amy.
Hi, Amy.
Hi, Amy.
So, Amy, we're just saying at the very top, there's 4 buttons. There you are. All right.
She's got it.
Cool.
The microphone is right next to the video. Do you see the microphone icon next to the video? That turns on your microphone. It's right above Dave's head.
He left the room. He's got to reconnect.
Uh-oh.
Amy, can you say something?
Uh-oh. She may be frozen.
I think she is frozen.
I was trying to do the screen share thing, but I think it's going to show. It's going to just show this infinite, like a house of mirrors type thing when I do it. But let's see if it does it. We'll try it real quick.
It might just be the Maryland show today.
There you go. Well, I don't have to talk about the SBA. I don't envy Perry though. He's gonna get all the questions.
Hey, Kevin. Can you hear me, Kevin? This is Tony. So again, when I went in, I couldn't see the signal, the little green signal. I could just hear it.
The little green signal.
When you do the test, it shows a green signal that lets you see it, and then you hear it. I could hear it, but I could not see it.
Okay.
And that does it it's been doing that for me each time. So I just want
do you have your webcam plugged in when you do the test or?
Mm-hmm. I do.
Really? Huh.
Mm-hmm.
All right, I'm going to jump out and jump back in here real quick.
So, Dave, do you see the signal when you come in? Do you see the green signal when you do the test?
Yeah. Yeah.
Okay. I knew I would, because it did it the first couple of times. I saw the signal and heard it, but these last couple of times it's not been doing it.
Perry, I just sent you a text if you can hear me.
I think Perry, he was having trouble earlier. He said he had to type in the link. He said it was only trying to open an Internet Explorer, which will be a problem. Perry, I don't know if you can hear us, but it's not going to work in Internet Explorer. You'll need Chrome or Firefox or Edge, something more current than regular Internet Explorer. You can you can use your phone or iPad even if those are an option.
I just copied it out of your email and then put it in my Chrome and opened it that way. Because when you just click on it, it just took me to Internet Explorer. So
Yeah, there's the infinite loop that I was telling you about. So, but these are the buttons up here at the top. If you want to see them. So that will be, the first one is the camera, and the second one is the microphone, and of course the third one is the screen share. So I'll turn that off. we don't need that kind of that kind of distraction.
I think that's what you call inception, huh, Kevin?
That's inception, yeah. Hey, that's why we get on here early, test these things out. But we did lose Amy. Amy, she's not been able to reconnect at all, has she?
No.
Make sure I don't have an email. In her situation, it almost was like the internet had just dropped out because it just froze with that image on the screen. Perry is connected. But no audio or video. So Perry, if you can hear us, at the very top of the screen, you'll see a button that lets you turn your audio on and off and your camera on and off. Those are separate controls. So you got to turn both of those on. It's one of those things, the system allows me to mute a channel and turn off a camera, but it will not allow me to turn on a camera for privacy issues, obviously. Do you have a number, Dave, for Perry? And maybe I'll jump on the phone call with him and see if I can help him through that.
Yep.
He's obviously getting connected, but just not anything else.
I'll be right back, you all.
Okay.
Hello?
Hey, Perry, it's Dave.
Yes. Hey, Dave.
What's going on? What can we do to up there? Sorry. Well, we can see you, but we can't hear the video. We just see your picture.
I've turned on my video. My audio's on.
What browser is he in?
What browser are you using?
I am using Chrome.
In Chrome.
Okay.
Yeah. For some reason, it keeps dropping me, and I keep reconnecting to the room, right?
Oh, hang on. Hold on just a second there, okay. There you go. I'm going to put you guys together here.
Okay.
I hope he doesn't hang out.
Turn the audio off.
All right, there you go. Kevin?
Yep.
Perry? Perry?
Yeah.
All right, Kevin?
Yeah, I'm on.
Okay, there we go. All right.
So, Barry, does it automatically put you from the room, or are you actually clicking leave each time? It's going in and out, which almost looks like an internet connection. Well,
You hear it?
Yeah, I can hear.
Oh,
Can you
good.
hear me?
Yes, perfect.
Okay. Sorry about that. So I missed the whole PowerPoint thing. So you're all going to be able to put it up there and we'll be able to click through our own slides.
Yeah, we'll show you that. We're having trouble with Perry getting him on. So once we get that worked out, we'll do a quick little practice. It's really easy.
Okay, that's fine. It just kicked me off a couple times. So I thought that was kind of interesting. So
Yeah. Yeah, I guess Kevin's having the same, Perry's having the same problem.
okay.
If you rebooted your computer in a while, maybe try that first to see if it's clearing out some of the gremlins. Okay, yeah, let's try that and see. If you want, we'll just keep you on the phone here, and that way Sorry, back up. Check on.
So Amy, are you good?
I'm good. I can hear and I can see you all. So I don't know what happened before when it totally locked up, but I think we're good.
Cool.
Which
So if you,
we had a Zoom this morning and it froze all of Maysville, I think. So that's the problem. I think our internet is so overwhelmed at this point.
one thing I think would be helpful if you and Marilyn both can do it is just to toggle that video and audio on and off, just so you know how to turn it on and off.
Oh yeah.
So if you want to go ahead and do that, Marilyn, as well.
Where
and that
is
way it'll be on your picture. You'll see two little icons, but also you can do it up at the top above Dave's head.
And what am I looking for? My PowerPoint?
No, just to turn the video off and to turn the audio
Yeah.
off.
Yeah,
So
I did that.
there you go. So that way, if needed, you can always turn it back on. That's the issue that, we've had before, is that if someone does turn it off, they may forget, and then you got to go look for the fact that it's two controls makes it a little bit different. There's one for the video and one for the audio.
So I need to mute myself when I'm not talking.
Yeah, you can.
Okay. But I mean, I need to, you can't mute it. I have to mute it.
It's better if you control it. That way,
Okay.
you know that you've done it. Yeah.
Yeah, I can turn it back on.
Okay, I'm going to check on Perry here.
All right, Perry. Yeah.
Hey, David or Kevin, can y'all hear me?
Yes.
I have a question for you all. Do y'all know if corporations or LLCs under the PPP, if they don't have utility payments, but they have like diesel fuel that they need to buy, can that be forgiven? Because I know it can for individuals, but corporations won't allow it. I can't hear you, Dave.
I was muted. I don't know, but it doesn't really sound like it.
So,
forgiven.
okay. Because I know under the new interim rule for individuals, it allows utility payments to include like fuel for self-employed individuals. They could do it for business vehicles, but I can't find anything for corporations. Okay,
Yeah,
so it's still.
I guess no, but I don't know for sure. These are all these little nuances that they try to figure out along as they go along.
I know. Okay, I'm just gonna reach out to a lender and see if they know. It's like it changes from day to day. It's crazy.
They did send out new PPE FAQs as of the 17th. I doubt it gets down into that because there's a lot more lender information in there. I kind of doubt it gets down into that
Yeah, no.
level.
So, thanks you all.
And guys, while we're working on Perry, do you all want to check the your presentation so you can kind of see how to start those? Amy, I don't know if you've looked, but on the right-hand side, you'll have that little red tab. And if you go down, there's an option for slides. And the ones that I had uploaded are there. So when it's your turn, you'll just click on Start Presentation. And then you can, but if you want to go ahead and try that right now so we can make sure it works.
I have, and I see them over there.
So click Start, and then you'll have to click Start Again. It's a little button at the bottom.
Gotcha. Okay.
There you go.
Okay.
And now if you'll notice, you've got controls that are on the right side in that little panel, but it's also down at the very bottom. It's almost invisible there. It's kind of transparent where it says Next.
Yes.
So you can control those yourself as you go through them.
Excellent.
And so go ahead and scroll through a couple.
Okay.
And now go back to the start because it remembers where you're at. I discovered that the hard way. And now just click on Stop Slide Presentation.
Okay.
And then when you do that, it comes back to this view.
Okay. So then were you also were we also able to upload like the map and then the attachment of the application for them to be able to review?
Yes.
Okay.
So we'll push that out. It goes out into the chat room. And so when you talk about it, we will push that out at that moment. And so you can speak about it and say, we're going to share these files with you so you can download them and have them for reference, but it'll show up in the chat room then.
Okay. Very good then. Okay. Thank you for the short education. I've not used WebJam before.
Sure. And Marilyn, if you want to try the same thing, on the right-hand side of your screen, you'll see that little red tab, and that will allow you to get into the control panel where your slides are.
Okay.
So down about almost to the bottom, it says Slides, and you'll see that there's 3 of them in there. And so if you want to go ahead and click on, I think I named yours the Kentucky Innovation presentation, probably not the most descriptive, but
I'm sorry. I don't see a slide thing. Where's the?
Okay. Did you click on the little red tab and that little panel slides out?
Is it the little red tab to the
Yep.
right of all our pictures?
Yep.
Okay.
Just click on that.
No. It just extends the screen.
Yeah. So when you click on it, it'll actually show there's like some settings at the top. There's a little settings cog and then one that says attendees and chat. But if you go all the way down there, there's one that says slides.
Oh, okay. I'm sorry. Okay. It was already open. That's what confused me.
Gotcha.
Okay. And now how do I get to mine? I see.
Yeah. So just click on the one there that's yours, just where it says Start Presentation.
Oh, I see. Okay. Wait a
So
second.
go ahead and click on Start just to try it.
Okay.
And then you'll have to click Start Again. It comes up with like another button at the bottom. There you go.
Oh, yeah. There you go.
And now you've got the control where you can advance it either through that panel if you want to leave that panel open, which is a lot of times just the easiest, or you can click the next button that's down at the bottom. It's almost transparent. It's hard to see, but it's in the bottom center of the screen.
Oh, no, wait a second.
All right, and I'm going to check in with Perry. Dave, if you can maybe guide Marilyn and Tony, and I'll be right.
I'm still trying to find the.
Yeah. So go back to your to the presentation. Start the presentation.
Yeah. Wait a second.
There you go.
Okay.
On the screen on the right, where where the small thumbnail of your first slide is, right below that it says Next.
Oh, I see. Okay.
Click that.
Awesome.
There you go.
Awesome. Okay. Easy peasy.
Yep.
Okay. Thank you.
David, what did he say to click to make sure that it starts from the beginning? Because it'll start from where she left it at.
I don't know. Jump back in there, Marilyn, and make sure it starts.
Well, BTAD comes up first. Well, let me see. No, because it's like small business development, BTAD, then me, then Perry.
Just open your slides, Marilyn.
Okay.
Okay. Perry is trying to connect from his phone, So we'll see. Hopefully he'll be able to pop in here.
Okay.
There you go, Marilyn.
All right.
You want to
There you're
start
back
from the
at the
beginning
Oh, okay. I see what you
Yeah.
mean. Okay.
and then stop the presentation. Yeah.
Yeah.
There you go.
There you go.
Okay.
So just keep in mind, Amy and Marilyn, that you all control your mics and your camera, so you can turn those on or off as you wish. And if you turn your video off, you'll see it just has your profile pic. So
Is that somebody's stomach or a dog?
It is lunchtime.
that's right.
And mine just gave me an internet connection issue, so it says it's audio only right at the moment. So can you all still hear me?
Yeah, we can.
Yeah.
Okay, so I may or may not be able to turn the video on. It says it'll tell me when the strength is strong enough again. I'm hardlined.
Gotcha.
Listen, I'm hardlined in. It's been a struggle around here.
Oh, wow.
Yeah,
I'll bring back.
we understand.
It's gonna be an interesting day here.
It will be. I'll do my best from here.
Okay, someone has already hit the start button. So we are actually on the air. And we can't end the call or we'll lose the link. So we've got several folks. So those of you who are joining us already in the chat room, we will be on shortly. Forgive us for some technical difficulties here. But we will we'll get things going right at 12 o'clock. And we'll edit this out of the recorded version.
Okay. Well, it's 12 o'clock, everybody. So welcome to another session of our Wednesday webinar. And today is a pretty exciting day. The last few weeks we've all been really focused in on the payroll protection plan and the idle loan program. So today we wanted to kind of give you a flavor of some other alternative sources while the Congress debates, and hopefully we'll finish up and refund those programs so you can access those. But in the meantime, today we have with us Amy Kennedy, who is the executive director of the Trace Development District. I don't know statewide if you guys are aware of these organizations, but they are a great source of business help and financing. We're also very lucky to have Marilyn LeBeau, who's the Senior Development Manager for the Kentucky Cabinet for Economic Development. And then hopefully, if all goes well, we'll have Perry Dunn, who is the SBA loan specialist for Huntington Bank with us today. So while everybody kind of gets settled in, I'd just like to give you a moment to share a little bit about the Kentucky Small Business Development Center, or the Kentucky SBDC for short. The SBDC has been assisting Commonwealth of Kentucky's small business community for more than 35 years, with 13 service centers statewide to provide assistance in all 120 counties. Our experienced and knowledgeable staff provides unparalleled consulting and training services that help existing business owners and potential entrepreneurs succeed. We provide no-cost assistance to areas such as market research, opportunity assessment, feasibility studies, business plan development and execution. Nothing like a plan without execution, right? Financial modeling and projections, and identifying sources of capital to grow your business or even to start your business. So if you'd like to request personal assistance, please call 1-888-475-7232 or email us at info@ksbdc.org, or just visit kybizhelp.com. You can also connect with us socially on Twitter, LinkedIn, Instagram, and Facebook, or just search Kentucky SBDC on each of these platforms to connect. We are sponsored by the U.S. Small Business Administration and is administered by the University of Kentucky in partnership with regional universities, community college, and the private sector. We are a national network under the American Small Business Development Centers Association, which serves the entire United States. When we're done today, we are recording this webinar, and we'll email that out to everybody else. And joining me is Tony Sears, Assistant Director here at the Louisville Small Business Development Center. And I, again, am Dave Etkin. I am the Center Director here in Louisville. So welcome, everybody. And so right now, I'd like to introduce Amy Kennedy. Maybe you could share a little bit about yourself, Amy.
Okay, I can sure do that. Again, my name is Amy Kennedy. I am the Executive Director of the Buffalo Trace Area Development District here in Maysville, Kentucky. For those of you that aren't aware of an area development district, there are 15 of those across the Commonwealth of Kentucky. So we are in all 120 counties serving governments, businesses, and lots of nonprofits. For the years of experience associated with many folks within the area development districts, we have seen a lot of things through economic times, but obviously nothing quite like this. So, I've been in this position 12 years, and actually with the agency 23. So I joke and tell people I started when I was 2. So we'll see what kind of knowledge we've got here. But happy Wednesday to everyone. I'm glad to have everyone on board. I see we have 124 participants today. So that's a great opportunity for those to learn more opportunities besides just the PPP, because now we are really waiting to see what happens with that.
Yeah. Well, Marilyn, introduce yourself a little bit before we get going here, and tell us a little bit about you.
Yes. Hi, I'm Marilyn Cabinet in the small businesses across the state of Kentucky. So really appreciate our SBDC partners and stakeholders inviting us to be here today and talk about this. Everyone needs all the resources they can gather right now to regroup and move forward, and we support you in all of that. So thank you.
Thanks, Marilyn. We're still working on Perry to join us. So I will say Perry has been a great resource to us here in Louisville. And as a Small Business Development Center, our job is to help people access capital, and especially through SBA loans and Perry and the Huntington Bank has been a great resource for us. So hopefully he'll be able to join us and tell us a little bit more about that. But also, as we go forward, please, on the chat button up there, please enter your...
Hey, Dave, sorry to interrupt you here. This is Kevin. I'm going to do a reset of the room real quick, and we got some folks saying they lost sound. So everybody just hold on, and we'll be right back.
Okay.
All right, folks, we had to do a reset there. Sorry about that. Just
All right.
the technical gremlins are out in full force. So I do apologize. Hopefully everyone will be populating back into the room now. And we'll give everyone just a moment here and then see how things are going. But Dave, it looks like things are pretty good on this end if you want to continue.
All right. Perry, can you hear us? Unmute yourself at the top.
Yes, I can. Can you hear me?
Yeah. Well, great. Good to see you, Perry. Why don't you introduce yourself a little bit here real quick?
Good to see you, Dave. Hi, I'm Perry Dunn. I am Vice President of Lending for Huntington National Bank, and I do SBA lending exclusively, primarily 7A and 504.
Okay. Marilyn, you still there? Nope. Looks like we lost our other two presenters, but all right, well, there you are, Marilyn. Can you hear me? Okay, good. All right. So, well, Perry, while we're waiting for Amy to hopefully get back in, she's had some connectivity problems. Maybe we could just start with you and we'll talk through some SBA loans.
Okay.
I was mentioning earlier, as we go through the presentation, talk to our folks today. Don't forget to put your questions into the chat room. We'll answer those questions until we run out of them. The idea today is to find alternative sources of funding other than what we've seen for the disaster loans, the economic injury disaster loan, or with the Paycheck Protection Program. So, Perry, you want to chat a little bit about other SBA products that are perfectly fine and available right now and being worked on and that people can access?
Sure. Can you hear me?
Yes, we can.
All right. Are we going to put up the slideshow, or you just want me to speak from the cuff?
There we go. You got it, Kevin?
I got it.
All right.
All right. Just keep on scrolling through, probably through the first couple slides. Keep going. Other direction. Other direction. All right. All right. This is the 7A program, and the 7A funding is still available. And we really feel like in the coming months and the coming years that 7A is going to become a much more viable product post-COVID-19, simply because we know a lot of businesses are going to have experienced financial distress. The conventional funding is going to be less available than it has been. This slide says why utilize the SBA as opposed to conventional. If you'll advance the slide, please. This is eligible use of 7A proceeds. It can be used for either acquisition of a business. It can be used for startup. It can be used for the acquisition of equipment or refinance debt, such as a balance sheet restructure. So it's got a lot of potential uses. It can be used in the same way that the traditional conventional products are. However, there's a big distinction between the conventional product and the 7A product. If you'd advance the slide, please. I'll skip through this. This just kind of details what SBA loans cannot be used for. It cannot be used for investment real estate or anything of that nature. It can only be used for owner-occupied, and funds are used for your specific business use. Forward the slide, please. All right, conventional financing versus SBA. The terms on SBA are historically much longer than what they are on the conventional side. On the conventional side, most equipment loans will only be for 7 years. And if you have to use permanent working capital, we're going to find permanent working capital is any use of funds that does not have a corresponding asset to support it. That could be used to fund marketing expenses or any soft cost internal programs. Most banks restrict the amortization on that to 3 years. So that's a very steep payment with a very short repayment. What the SBA 7A program allows is up to a 10-year amortization on any and all uses of SBA funds. I will tell you that Huntington Bank, every 7A loan that we do that is not supported by real estate as collateral is automatically defaulted into a 10-year amortization. The benefit of that is it's a much smaller upfront product. On loans that are secured by real estate on the 7A side, we can go out to 25 years. So if you'll advance the funds or the screen.
That's banker.
Yeah, advance the funds, exactly. So here are the top 5 SBA myths. It takes a really long time. You know, for a long period of time, that was absolutely correct. Today in the SBA world, at least in the Huntington world that I live in, once I receive a complete application, and typically complete application is defined as all the financial documents, personal financial statement, then we can actually turn it around within usually 5 business days. So once we receive the application and I submit, we're usually looking at 48 hours before it gets picked up by an underwriter. Once the underwriter picks it up, we may have some questions, some dialogue going back and forth, but realistically, we can usually anticipate an actual approval, not a pre-approval, but an approval, a commitment to lend within 5 business days. Once we receive commitment to send it to SBA eligibility review, to review the loan to make sure that it meets all applicable SBA standards, and that typically takes an additional day. So we can expect to have an actual commitment letter in your hand in 6 to 7 business days. So that long time frame no longer really applies. Too much paperwork? Yeah, there is a lot of paperwork, but a lot of it is just forms that you have to sign. Too expensive? As far as the SBA guarantee fee is 2.75% of the guaranteed loan amount. Now, that may sound expensive, but at Huntington Bank, any and all closing costs are added into the loan itself, so you do not have to come out of pocket for closing costs. We're going to add those in, so that way you have as much liquidity as possible once the transaction closes. An SBA guarantee turns bad deal into a good one. No, not necessarily. An SBA guarantee is only designed to offset one thing and one thing only, and that is lack of collateral. So it's not going to fix cash flow. It's not going to fix economic conditions or anything of that nature. It's just going to provide that collateral component. SBA doesn't require collateral. Actually, I think that may say SBA does require collateral, because realistically, the SBA does not require collateral. Any loan less than $350,000, we do not have to have any additional collateral beyond the assets of the business that you're acquiring. Anytime a loan exceeds $350,000, according to SBA regulations, if you own real property that has greater than 25% equity in it, we are required to take an AOC or abundance of caution mortgage on that piece of property. So less than $350,000, no collateral is required. Above $350,000, if you have equity in property, we're required to take it. However, if you do not have equity in property, it does not mean that we're unable to do the loan. So I think that slide's incorrect. Should read SBA does require collateral. Okay, if you could advance to the next screen. Eligibility. And I'm viewing this through my phone, so I'm trying to read it. It's very small, to be candid. But you do not have to have a large net worth to qualify for an SBA loan. You cannot have any tax liens. As far as prior bankruptcy is okay in SBA lending. However, it has to be fully discharged, and the applicant has to have reestablished credit and not had any past dues since the time of reestablishment. A lot of lenders like to take an easy out and say, if you file for bankruptcy, you're no longer eligible for SBA financing. That's simply not true. We do work with several clients who have taken bankruptcy in the past. Sometimes bad things happen to good people, and it's unavoidable. Excuse me. So bankruptcy is not a disqualifying event. You cannot have a prior default on an SBA loan. So if you have defaulted on an SBA loan, then you are not eligible for a new SBA loan until that old debt is paid off. So if you defaulted on one in a prior life and we pay off the SBA debt, then we can make you eligible again and you would qualify. Must pass a background check. When we say a background check, what we're going to do is check to make sure that you are not currently on parole or under indictment or anything of that nature. Quite often we find that people have prior offenses in their lifetime much earlier on in their life, and we just have to fill out a form, explain those. So that is not a disqualifying event, but if you are currently on parole, then that could be. Okay, if you could advance the screen, please. What do we look for? Well, as I said, when it comes to existing businesses, we're going to look at profitability. So the SBA is not going to fix poor cash flow. Now, what we can do on the SBA side is if you have an existing business, you've got a lot of debt that you've taken out for permanent working capital, and perhaps it's on very tight terms with large payments, we can do what's called a balance sheet restructure. Essentially, we take all your debt, consolidate it, put it in one loan payment, and amortize it over 10 years. If we can achieve acceptable cash flow by doing that, then the SBA can fix historical cash flow problems. So we need for you to be profitable today. We need historical cash flow. We're going to look at your historical cash flow, see how you've done over a period of time to make sure you can support the debt level. Collateral, again, we've addressed that, not necessarily. If it's available and it's above 350, we'll take it, but you don't have to have collateral to apply for an SBA loan. That is one of the biggest things that I get is, but I don't have any collateral to secure the debt. As far as the bank is secured, our collateral is the SBA guarantee. It's in and of itself. We do not need additional collateral beyond that. Balance sheet analysis. Yes, we're going to look at your balance sheet to see how you're structured, see if you have equity in the company, and see if we've got some trends that we need to take a look at and possibly fix, such as if you've got a line that is stagnant, you've got a lot of permanent working capital built into that line of credit, and it's impacting your ability to get funds to continue with sales. What we're going to do is look at your personal credit score. So you've got to have decent credit. This is not a product for people with poor credit. So our minimum credit score is 640. More often than not, we like for it to be higher than that, but you must have decent to good credit. Relevant experience, we want to know that you have good experience in the industry that you're stepping into. So if you're a startup and you're going to open a restaurant, we want to know that you have previous management experience in a restaurant, not just a server or anything of that nature, but actual experience. If it is an acquisition and you're acquiring a company, we want to know that you have relevant experience in that field. Next slide, please. What are we looking for from the banker's perspective in cash flow analysis? The minimum cash flow coverage that we have to have is 1.15. This says 1.2 to 1. So what we're going to do is take your net income. We're going to add back depreciation, amortization, and interest expense to come up with cash flow available for debt service. So for every dollar in debt that you have, you need to have $1.15 or $1.20 in EBITDA, which is earning before interest, taxes, depreciation, and amortization. Next slide, please. I think I just went through how we calculate cash flow. Again, just take your net income. We look at the M1. The M1 is actually underneath the balance sheet in the 1120 on the tax return. We're going to add back depreciation, interest, and amortization. If we've got section 179 expense, then we will add that back as well. What we're going to do is track 30% off the net income to account for all federal and local taxes. So if your net income is $100,000, then we'll automatically give it a haircut of $30,000 for the taxes, and that would leave net income of $70,000 plus the other add backs. We can look at other add backs on a case-by-case basis. So if you have had an extraordinary event and a non-recurring expense in a year, then we can possibly add that back. Hypothetically, if you had to put in a new HVAC system, it costs you $25,000 to do that. That is a one-time non-recurring expense. If we're comfortable with the credit, we're a little light on cash flow, we can actually add that $25,000 back in for cash flow purposes because we know that's not going to occur year over year. Next slide, please. Top 5 decline reasons are lack of money to put down. Anytime we have a startup, right now we are requiring 30% cash injection. If it is an acquisition, then we are going to look at 20% down. I'm not going to go into a lot of great detail about it unless people have specific questions, but that 20% down on an acquisition can be dissected in many different ways. It doesn't necessarily mean that you have to come up with 20%, but at the end of the day, we have to have 20% equity in the project. So that can come from the seller himself through a seller note. But the minimum amount that is required per SBA regulations for a 7A loan is 5% of the borrower's own money. So if you think you have 5% and you can put it in and we can get the loan, that's not the case. What we're going to have to do is to come up with an additional 15% of equity, and more often than not, that through seller financing. Another decline reason, lack of repayment ability. The SBA requires that we be able to demonstrate that the business has the ability to repay the debt that is requested. So if we have a company that has historical numbers, we are going to rely on historicals. So if you're looking to make adjustments within the company, maybe reduce some expenses, tweak a few things to obtain profitability and offer projections, we will not step into projections on a go-forward basis if we have historical cash flow. So the company does need to have the ability to repay the debt on a historical basis. When it comes to startups, then what we're going to do is rely on the projections themselves. You're going to provide your projections. We're going to give them a haircut of 25% off the top and compare them to RMA. After we give them the haircut and compare to RMA, if we have the ability to repay the loan, then more often than not, it's granted. Lack of guarantor support. We do like to see guarantor support in the form of additional liquidity. So we do like for you to have some cash on hand personally, because what's going to happen is we know that insufficient liquidity is the largest failure or the largest cause of failure of businesses. So we want to see that you've got cash available to you. So if sales do not materialize or expenses are more than expected, that you've got cash to weather the storm. Lack of sufficient collateral. Again, personal collateral, we're not taking that. I already explained that. Only on $350,000 and greater are we required to do so. A high debt to income ratio. So if you personally have a high debt to income, meaning that you have a lot of personal expenses relative to your income level, we're going to take that into consideration. So we're going to take a hard look at the business's ability to cash flow the requested debt. And then at the same time, we're going to take a look at what your ability is to meet your personal obligations. So if you have excessive personal obligations, that would result in a decline. Next slide, please. Defining, solving the 8 decline reasons. I think I kind of gave some commentary on that as we went through it. I mean, when you step in and you want to borrow money, try to have as much personal liquidity as possible. Secondly, make sure that you have taken care of your credit in itself. Pay your payments timely. Make sure you have good credit. If you've got a lot of small collections and charge-offs out there, whether they be medical charge-offs or anything else, I would say go out and try to clean those up as much as you can prior to. Next slide. Other useful information when considering an SBA loan. And again, this is very hard for me to read. I apologize.
So this just talks about that the SBA requires, the SBA guarantee is not a substitute for available credit or collateral, I mean.
Correct. Well, I mean, as far as the bank is concerned, our collateral is the SBA guarantee. So we like to see net worth. We like to see that you have historically been able to pay your bills and acquire wealth, but lack of collateral is not a disqualifying event. we're going to go back to the SBA guarantee. That is what our actual collateral is. The way the process works, in the event of default, we petition the SBA to honor their guarantee. They pay us off and we're out of the transaction. So the additional collateral would actually belong to the SBA and not the bank. But if you do not have additional collateral, I would say please go ahead and apply if you meet all the other parameters, because that will not be a singular disqualifying event. Dave?
Yeah, go ahead.
Yeah, I mean, in a nutshell, that's what the 7A program is. It is designed for people that do not have available collateral to support the loan. So obviously, when we're talking about restaurants, most often the restaurants are leasehold improvements, meaning that the money that you spend to get your restaurant up and going, those improvements are retained by the landlord himself. They do not belong to you. So it costs a lot of money, as we know, for leasehold improvements. So if you have to spend $500,000 fixing a place up, restaurant equipment is very expensive. However, as soon as it's used, it has very little to any value. So there is a complete lack of collateral. That is a transaction that would fit the SBA profile because there's not collateral there to support the transaction. Another place that the SBA is extremely good would be in business acquisition. So if you're acquiring a company and they have a goodwill value, typically what we're seeing as far as goodwill, back to our EBITDA calculation, you can take the net income of the business, add back depreciation, amortization, interest expense, excess officer compensation, and that number would equate to about a 4 multiple or 4 times value. So hypothetically, if you had a company that had $100,000 a year in EBITDA, the value of that company is $400,000. Well, that has no collateral component to it because all that is goodwill to the business that it has created over time in the cash flow stream. So there's nothing there to support that debt but an SBA guarantee. So the SBA provides the necessary guarantee, provides the collateral to support a transaction that may have a large intangible value, and it wouldn't be uncommon to see intangible value in a company if they were making a whole lot of money, anywhere from 1 to 2 to 3 to 4 to 5 million. So the SBA is the perfect avenue for financing that goodwill value. I will say one thing, more often than not, if you go to your bank and they want additional collateral and you are declined by them, that is probably a very good time to start looking at alternative financing being the SBA, because most of the loan requests that I do get have been declined by other banks, sometimes 3, 4, and 5 times, and then we're able to come in and do the loan.
All right.
Hey, Dave.
Yeah.
I have a few questions for Perry. Is it okay to go ahead and to pose some questions to him?
Let's save that till the end.
Okay. All righty.
Let's get Marilyn and Amy on, and then we'll take questions. All right.
Who goes next?
All right, David.
Amy,
for you.
Amy, you want to go? I mean, yeah, Amy, you want to go? Next.
Yep, I can sure do that. Not a problem. Let me get the presentation started here.
Okay.
All right. First of all, I do want to share a map of the 15 area development districts that I did mention that are across the state of Kentucky. Hopefully that they can actually share this map with everyone. But for everyone that is looking at that across the state of Kentucky, there are 15 area development districts. 11 of the 15 have loan programs, which are called revolving loan fund programs. So with that being said, lots of opportunities there to tap into funding that may not be as stringent requirements associated with the some of the SBAs and some of the other things and documents associated with that, with the guarantee program. These are not a guarantee programs we've received funding from the federal government to fund small businesses within our regions. So, of course, I represent the Buffalo Trace Area Development District in northeastern part of the state, and a lot of us carry loan specialists and loan officers in-house to actually run our programs as well. So showing you, these are the 5 counties that the Buffalo Trace Area Development District actually serves. But again, there are 11 of the 15 across the Commonwealth that actually have these programs as well. We cover the counties of Bracken, Fleming, Lewis, Mason, and Robertson, and have loans in all of the counties that we serve. So I'm going to dive in a little bit just about our programs. They're a little bit different across the state with each loan plan that has been approved by the Economic Development Administration as well as USDA Rural Development based on the funding that has come along. So clicking through here, just within our 5 counties, we do have loans that we make, and our maximum goes up to $200,000. Terms can be anywhere from 5, 10, 15. It just kind of varies by the situation associated with the loan and the life of the collateral, because we do also require collateral. We do have a locked-in interest rate, though, that was approved by our funding agencies associated with the funds that we were awarded, and ours currently is at 6% during that funding award. So I know that doesn't sound very enticing right now, but at the time that the plan was approved, that was the rate at the time, and we do actually have to go through plan updates at different times. So that's something that we will be looking at. We absolutely do not want to compete with any banks. We like to partner with the banks. What we like to do, because obviously, as you can see, $200,000 is not a very large loan when it's in association with a startup, when you have to actually purchase property and equipment, lots of things associated with that. We do like to partner with your local bank and encourage that greatly. That way the risk is kind of spread, and then we also do not fund at 100%. And when I say fund at 100%, that's both financial institution and us combined. We don't look at doing that at 100%. We like to go no more than 90%. So a lot of times we do split that with the financial institution and with the Revolving Loan Fund program. So moving on, we do look at lots of different type of business loans, but some of the things and targets that we try to reach are the goal of creating or retaining at least 1 job per $20,000 of lending. We can actually ask for a waiver for that in times like this associated with the non-production and non-business activities, because obviously we want people to be working. My agency also works a lot with the unemployment insurance system associated with all this layoffs through the career center. So we want everyone to be working and for the small business to be able to survive in our regions. But many of the funds can be used, as I said, for real estate, for equipment, for working capital. A lot of times you can't get a working capital loan through a financial institution, and sometimes that's where we can step in and try to help out with that if there is some additional collateral value out there. Just in general, wanted to kind of click through and show a few of the variety of loans that we do carry. From restaurants to landscaping businesses to bowling alleys, just lots of different things. We also fund infrastructure in the region, medical offices, just a large variety. But to actually obtain a loan through the Buffalo Trace Revolving Loan Fund program, wanted to share with you just some steps that we take. We partner a lot with the SBDC that was mentioned earlier at the beginning, and obviously who is working and sponsoring these webinars. But we refer a lot of startup businesses to the SBDC, and then we also have a local entrepreneur center for them to have assistance in completing a business plan. If it is a startup business, they have to have the business plan to present to us. If it's not a startup, we look at different things, but if it's an expansion of that business, or reopening of that business, we would look at a business plan and kind of plan of action associated with that. If it's an existing business, then we would look at tax returns, those type of things associated with it. Then we actually have an application to be completed, and that is actually also a download that you can look at. And this is a sample, of course, of ours within our region. The other 10 will have a very different format, I'm sure, because each region is allowed to do their own application with those funding opportunities. But that is something that you could take a look at. I mean, it's a lot of history of the business, you know, lots of different things associated with the business specifically. Talks about environmental accomplishments and those type of things if you're purchasing property. Throughout the process, if you're interested, we highly recommend remaining in contact, obviously, with the loan officer of the area development district as you work through questions and answers that they may have relative to the project or the business itself. Once they get to the point, the loan officer gets to the point where they're comfortable with the loan to make presentation, that loan will be presented by that loan officer to our loan committee. And if approved, the appropriate appraisals, deed preps, et cetera, will take place for the documentation of the collateral, those type of things. And then, of course, we'll have a closing to where funds are exchanged. And then, of course, you know, payments will begin at that point. We currently do not have a deferment plan associated with any of our loans right now. But that is something that we are working with many of our businesses currently in this situation to where they can have a plan moving forward, waiting on some of their other funds through either the PPP or other things to come in. The loans that I'm speaking of specifically do not have anything to do with the PPP program. These are funds that the Area Development District actually has all the time. And it's obviously the loans are based on our funds available because they do revolve. So we've had some larger loans that go out the door sometimes at $200,000 and multiple of those. We may be slim on dollars at the time until others actually pay those funds back and revolve that money to make it available for others. So that's just a real quick thumbnail summary of what we have with the Area Development District. So there's a question I see in the chat real quick that I'll address. That what are the ads that don't have loan programs? There are actually 4 that don't have loan programs. That is KIPTA in the Louisville area, Big Sandy ad in Prestonsburg, Kentucky River in Hazard, and the Bluegrass in the Lexington area. The other counties within the Commonwealth are covered by those.
Okay.
Just trying to look real quick at the chat. So
we'll get to the questions here just a little bit.
Okay. Sounds good. Okay. Thank you all.
Marilyn, you still around?
Find myself here. Find my slides.
Hello.
Did my slide come up?
Not yet.
Oh, wait a second. Oh, here. Got to hit start. We're all learning all this new technology. Yes, just to recap, I'm Marilyn LaBarba. I'm with the Kentucky Cabinet for Economic Development out of Frankfort. And as many of you may know or not, the Cabinet for Economic Development is the primary state agency in Kentucky responsible for encouraging job creation and retention and new investment in the state. So at the state level in Kentucky, the Cabinet for Economic Development, we're the jobs and investment folks. So we don't create the jobs, you do. Our mission and our vision is always to make sure you have all the information, resources, and contacts that you need to get your job, get your company started, to diversify it, to have alternate locations, whatever it is that you need. That's our mission, is make sure that you have that. Within the Cabinet for Economic Development, we have about 70 people. I haven't counted up recently. But there are about 70 people. We're all based out of Frankfort, but we do engage with businesses in all 120 counties. And of course, we also, bring projects that come in from out of state. And within the cabinet, I'm in the space, it's the Office of Entrepreneurship, but we're also known as KY Innovation. And so that's how I'll refer to it in this presentation. Our 2 websites are here. the ced.ky.gov, which is the main website for the entire cabinet, and then kyinnovation.com goes specifically to the area that I work in. So I was invited to talk to you today about the Small Business Credit Initiative, and this is a great follow-up to what the information that was presented by Perry and by Amy. And, you know, I'm sitting here thinking, you know, I hope one of the takeaways that people take today is that it's really beneficial for you to work with an experienced lender. They can really help you. You know, if you go in and you're realistic and you're honest with them, they can really help you and give you guidance on what's going to be good on that. So the Kentucky Small Business Credit Initiative, and this program, I think we started participating in it in 2011. And it actually came out of the Jobs Act of 2010 at the federal level. And it was a response to the recession, you know, trying to get money out the door with the lenders as a response to the recession. Unfortunately, as it did in the recession, I think Perry and Amy and all of you at the SBDC, we all were there at the same time too, is that the lenders really contract and hold on to their money as most businesses do. So trying to give them that comfort. So this is a program that we have experience with and the lenders have experience with. So we're certainly going to make it, you know, make sure that people remember it and take use of it. Here, let me get my next slide. So how this works. And I do want to just mention too, Perry really went very thoroughly through some of the considerations on an approval for an SBA 7A loan, which I think was great, but I do, and that kind of supports collateral with a guarantee to the lender. This program supports the lender with an actual cash deposit on support and on deposit with the lender. So the, what I want to bring up is you can't use both. Okay, so you wouldn't be able to use the Kentucky Small Business Credit Initiative to make up a collateral shortfall on a 7A loan. You can't what we call double dip that way. So, but the tool for the lender is that they, as I said, they can get additional collateral if they need it on a loan. So if the the Cabinet for Economic Development, we don't get involved in the credit decision. That's completely up to the lender. Just a little bit easy math, how this might work is if, say, if you have a loan request for $100,000, that you need a loan for $100,000, and you go in and the lender evaluate your loan, et cetera, and you know you've only got like $75,000 worth of collateral, and they say, well, we like you, we like this project, but this is outside our guidelines. So let's see if we can enroll it in the Collateral Support Program with the Kentucky Small Business Credit Initiative. On a $100,000 loan, if it qualifies, we could put up to a 20% on deposit. So that would be $20,000 cash collateral deposit with the lender as additional collateral on that loan. And then, of course, if there was a default, they would have some additional collateral there to draw from. The lender would. Obviously, this does not reduce your indebtedness. You still have to, repay the entire loan. And the purposes for this particular program, as it is now, is that we're mostly looking at real estate and fixed assets, so equipment, real estate and equipment on this, not capital access. Now, with the situation going on in the economy right now, obviously, they might look at that again and see if there want to be any updates to that. But right now, it's just fixed assets. So, what happened? My slides aren't moving. Hold on here a minute. Well, oh, wait a second. Got it. Okay. I want to talk you through a little bit of the process on that goes through with this loan. So again, there are more than 40 participating lenders. If you go to that Small Biz Lending website, you can look them all up either by county or statewide. Couldn't list them all here, and it includes national and regional banks. I know Perry's Bank of Huntington National participates in this program. I think they're at a statewide level. Community development financial institutions, some of those you might have heard of would be like Community Ventures Corporation out of Lexington, or the Mountain Association for Community Economic Development, Mason, headquartered in Berea, Kentucky Kentucky Highlands Investment Corporation out of Eastern Kentucky, et cetera, and credit unions. We did just have one credit union sign up, and so they're entertaining business loans now. You as the borrower, the borrower works with the lender and the lender works with us. So you don't need to contact us to make application on this loan. You look at the participating lender list. And if your lender's on there, fine, or you can pick another lender. Or if your lender is not on there and they're interested in it, they can contact us and we can get them signed up. Excuse me. So you go in and discuss your project, your financing needs. And as I said, you know, Perry went very thoroughly through the 7A loan with the SBA, and they're very experienced in the SBA. If you sat down with someone like Perry or another experienced lender, they can say, well, these are all the programs available and kind of help you assess which one would be best for your needs. And then you make the loan application. The credit decision, the underwriting, and the terms of the loan are at the discretion of the lender. We do not get involved in that. It all gets done by the lender. So the lender goes through, looks at your loan. Very often they take, they'll take it to loan committee and decide internally that they want to make the loan, but that it's short on collateral. You do still have to have down payment. Everybody mentioned here down payment. This does not make, sometimes we say collateral support, people hear down payment assistance, and it's not, that's what it's for. You have to have your down payment. You have to have equity in it. Into the loan project. So the lender would say, okay, well, we like this loan, just like I said, if it's $100,000 loan, but we're short on collateral, so let's see if we can enroll in collateral support. So they submit the documentation to the Cabinet for Economic Development for review, and review. It has to all be prior to the loan closing. We can't go back and put collateral support on a loan that's already been closed. Excuse me, they're reviewed by the Cabinet for Economic Development staff. Kylie Palmer is the program manager. She's in our financial incentives department. And then myself and Christine McNeil in the KY Innovation office, we review them on the front end, kind of work up a summary and point out to Kylie any other information we might need. Sometimes, there needs to be an appraisal or other information, leases from the landlord, et cetera. And again, we turn it around inside. This does not go, it just stays within our office. It does not go to another office or to the federal government. It stays within the Cabinet for Economic Development. Projects requesting $250,000 or more in collateral support do have to be approved by the KEDFA board, which is the Kentucky Economic Development. It's the finance authority. I wrote financial authority, but the KEDFA board, and they only meet once a month. So I only mention that because if there's a timing issue, if they're trying to close quickly and we have to send it for approval, that's one consideration. But anything with support under $250,000, we can turn it around internally. It doesn't have to go to the KEDFA board. Wait a second. So that's a presentation on the Kentucky Small Business Credit Initiative program. Again, I just wanted to recap a little bit here about the Cabinet for Economic Development and KY Innovation. We obviously have all other kinds of resources and information available, so please visit our websites, get in touch with me. And, we're back to rebuilding and regrouping here and pivoting and seeing what comes next. So got some really experienced folks on the line here today that can help you with all that. Thank you.
Thank you, Marilyn, and thank you, Amy, and thank you, Perry. So now I'd like to open it up to questions. So Tony.
Hello, everyone. Perry, this question goes out to you. If you are still here, are you still here, Perry? Okay. I'll move on. I've got a couple of questions for Amy. Is Amy still in the room? Are still here? Are you still here, Perry?
Can you hear me?
Yeah, there's Perry.
Now I can hear you, Perry. Okay, I can hear you now. Okay. So first question for you, Perry. Amy. Is Amy still in the room?
Yep.
Are still here? Are you still here, Perry? Can you all hear me okay?
I can hear you.
Okay. So can you get a 7A loan if your company experienced a loss on your books? That's the first question.
Well, it would depend upon what is contributing to that loss. So hypothetically, let's say that your company did show a net loss of $50,000 for the year, but you had $300,000 in depreciation and $200,000 in interest expense, then your cash flow would be positive. So a loss does not necessarily disqualify you, but what we're going to do is look at the add back of depreciation, amortization, and interest to support the cash flow that we need.
Thank you. Another question, Perry, for you is, will Huntington or Essence SBA consider lending to a non-essential business that is completely shut down right now?
Well, that has more to do with the PPP program and not the 7A program. And I feel like there's a lot of questions surrounding that. We are dealing with that as it is. So I'll give you the best answer that I can. Right now, Huntington Bank is only lending to their current customers and not to non-customers. What we're defining as a current customer is someone that has either a business loan with us or a business checking account. Now, I would like to give a little bit of background about why that's going on. I know there's an awful lot of blowback in the media as far as banks not lending to non-customers and an underserved market. I would completely agree that the PPP program is not necessarily serving all those that need to be served. But the reason banks have had to make the decision to lend to their own customers as opposed to non-customers, one is availability of funds. Obviously, there are new funds coming out very soon. That was approved by Congress. But the biggest consideration is what's called CIP, or Know Your Customer. So anytime that we take a new customer in the bank, we have to comply with the Patriot Act, which means that we have to get a considerable amount of information to verify who the customer is. And because of the urgency of this program, when you have to go through that CIP process, it slows it down dramatically. So that's why most banks have limited it, at least the early going, to their customers, because they already have that CIP information on file. That just eliminates an additional step in the process of being able to get that funding. I hope that answered the question.
Yes, thank you. I have a couple more for you, Perry. So can the 7A loan have a co-signer if the credit requirement isn't met?
Yes, ma'am, it can.
Okay. Are these the requirements that you listed in the 7A, are they the same requirements for a 504 loan?
504 is a whole lot different. With the 7A program, it's what we call a guarantee program. The government is not actually lending money, they're just guaranteeing the debt. With the 504 program, the SBA is actually lending money through a debenture. So largely the credit underwriting is the same, but yet they're different. So that with the 504, it's broken down to two components. You have a bank piece, you have an SBA piece, you have two separate loans, and that is designed for capital assets, which would include real estate or heavy equipment that has a useful life of 15 years or longer. It would not be used for a situation such as goodwill or permanent working capital or anything that has intangible.
Okay. One more question for you, Perry. Does the CARES Act provide a 6-month grace period before first payment on new SBA loans?
That is absolutely correct. And it also provides a 6-month, it's not a grace, it's actually, it's not a deferment. The SBA makes the payment for 6 months. So existing SBA customers, their payments were forgiven for 6 months. And that forgiveness also extends to any new transactions that occur before September 1st, 2020 is my understanding. So if we were to originate a 7A loan today, then the first 6 months payments would be forgiven. Yes.
Thank you.
I got a question. I got a question, Tony, for Amy. You still there, Amy? Amy? Okay. Well, Marilyn, are you still there? I got a question for you.
Yes, I'm here.
Okay.
Amy might be muted. Maybe she muted herself.
Yeah. So you mentioned the credit support program. Can you just give us a little inkling of some other programs that the Kentucky Cabinet of Economic Development may provide to entrepreneurs?
Yes, definitely. That's why I recommend they go on the website. One that's real popular is the Kentucky Small Business Tax Credit Program, and that can apply. Award a tax credit to eligible companies that apply. The company has to have 50 or fewer full-time employees. But if they created new full-time positions in the last 24 months and also made an investment in qualifying equipment or technology, they could get up to $3,500 per eligible position. So that's definitely something they want to look into. Unfortunately, they do have to show a net increase, and people right now, they may have had to let people go. If they're furloughed or laid off, we will look at that because potentially they may still be part of your employment base, but we'll have to look at that case by case and get a legal opinion. But really trying to make sure people don't miss that if they're going to be eligible for it, because the tax credit has a 5-year carry forward. So even though you might be regrouping and, it might be a couple years before you have a tax liability at the state level, you will in the future. I'm confident you will in the future. And then you can use this against that tax liability. It's non-refundable, so you don't ever get a check back, but you can apply it to your state tax liability, your income tax. And if the tax is awarded to the business, and if your business is a pass-through entity like a sub-S corporation or a limited liability company, that tax credit can pass through to the individual owners. So there's that. And then also the state trade expansion program for international trade. And this is a federal program out of the SBA. And so, if you want to get in, because this is as you're rebuilding your company, if you say, well, I've done exporting, or I want to get into exporting, that's going to be a new avenue for me. Take advantage of this. This is an actual grant. It's a reimbursable grant, but you have to do the activities and then submit your invoices and get reimbursed for that. So that would be for activities that you're doing, selling your product outside of the United States. And that's an excellent program, and that is in place also. Government procurement, that doesn't come particularly directly through us, excuse me, but the Kentucky Procurement Technical Assistance Program is another way if you want to get in selling to the government. So that's another program that you want to look into. That's free assistance. They're located in Lexington, so you want to look into that. And then the SBIRS TTR, excuse me, which is America's Seed Fund for Innovation. If you're, very often that's research coming out of universities, et cetera. As we all know, unfortunately, when economic times are bad, innovation gets high. So that's definitely something you want to look into if you're going to be selling to the Fed or working with those agencies. And we do have a match program on that. So that's why I say, please do look at the kyinnovation.com website for these other resources.
Wow, that's a lot. Amy, are you still there? Did we lose?
Did you say Perry?
Amy?
Oh.
No. Okay. Tony, you got one?
Yes, actually I do, but it's PPP related.
Let's do it.
Okay, so David Sauerback, thank you for chatting with us. His question is basically, he's already filed a PPP application with his lender, but he's not signed anything yet. Can he make changes due to clarification on how to calculate the monthly average? He wants a larger loan amount. Can he make amendments to it?
All right, I'll take that, Tony or David,
okay.
If you want.
Thank you, Perry.
Thank you, Perry.
All right, right now as it stands, the answer is it's not that simple. If you wanted to do it today, the answer is no. And the reason being because the original funding is completely tapped out. So there are no additional funds available. So what would happen is you would have to wait until new funding became available, and we would have to originate an entirely new application to put in that larger amount. So really, I mean, now the funding's become available. It's a lot easier to make that decision than it was, say, a week ago, because if people wanted to increase the mechanism to do so because there was no funding available. Now that there is, you can reapply and for the higher amount, but what that would do would take your existing application and it would kick it out of the queue. So you would have to go through the entire process and get reapproved.
Thank you, Perry. Can you answer one more question on the PPP for me?
I'll try.
Okay, thank you. I appreciate it. So this comes from Jody. She says most of the stuff asks for tax forms. What about those of us who are 1099? I'm a single person LLC.
Okay, 1099 was opened up on March 10th. Unfortunately, most of the funds were taken up by March 10th. So with the 1099, what you're going to do is you're going to call in to your respective bank and you're going to make application. And I would assume that what they're going to ask for is just a copy of your 1099.
Okay, thank you. That actually ends all of the questions from the chat room. We do have a few for the area districts development, but is Amy back on board?
I'm back on. I don't know if you can hear me.
Hey.
Yay.
Okay.
I'm back. We've had some technical issues on this end, but we're back.
It's been a hard day. I'm looking forward to it here later on.
Right.
So Dave, I'll go ahead and let you go first.
Okay. So you talked about your loan program there at the Buffalo Trace, but I know you talked to the other district directors. I mean, can you give us a little overview of what else is out there across the state with the folks you work with on the other districts? What their loan
similar to the loan programs? Yes.
Mm-hmm.
Well, they all have similar loan programs. Some of their restrictions may be slightly different than ours, as I presented with like the loan maximums and the interest rates, those type of things, collateral balances, those things as well. But they're relatively similar programs, and it's just a different process possibly to go through with an application, et cetera. We also partner a lot with, as Marilyn stated, with the Economic Development Cabinet with businesses too. On startups outside of loans, we can actually work with you as well and work through the counties for things such as
Okay, so one question is, they submitted their application 3 weeks ago for the EIDL. They've never heard anything. Is that application still open?
And ask if your application is still on file. They won't be able to tell you where you are in process, but they will say that they do have the application. If you applied prior to March 30th, and this is where they made a website change after some data breaches that you may have heard about, you may want to reapply once the funds become available. Hopefully that'll happen maybe Friday.
Okay. I've got a couple questions.
Tony,
yes.
Can I interject on that real quick?
Sure.
All right, because this is a question that we get quite a bit, and just to provide some clarification on it, the biggest question we get is, can I have an EIDL loan and a PPP loan at the same time? There's a lot of confusion regarding whether it's both, one or the other. Our understanding is that yes, you can have both an EIDL and a PPP loan. However, they cannot be used for the same purpose. So if you took an EIDL loan to pay your staff, then you can get a PPP loan, but you have to pay off the EIDL loan with those funds.
Thank you. So I have a PPP question. Let's see here. It says, we are currently on reduced hours. Do we need to restore the full 40-hour work weeks immediately after getting the PPP funds?
Perry, you want to do that one?
Well, that's a tough question, because when it comes to the program in and of itself, we question a lot in Huntington. And, you know, the entire goal of the PPP program is to take people off unemployment. Don't know that you necessarily have to bring them back to work, because if you're not essential business, then you can't. And what it's going to come down to is that you're going to take those funds, pay them, and then they will fall off of the unemployment payrolls. Now, the biggest question we get next is what happens at the end of 8 weeks. Unfortunately, complete guidance has not been given. What's going to happen at the end of 8 weeks, we have no idea. To be completely candid, and this is my personal opinion, let me stress that, personal opinion, not Huntington Bank opinion, it's just a lot of kicking the can down the road. Because what's going to happen in 8 weeks, the government's going to step back, take a look, see what businesses and what parts of the economy have been reopened. Obviously, if you're in a state and your business is still shut down, then it's not going to be possible to bring those workers back on. So there's still an awful lot of guidance yet to come and a lot of things to figure out from that end.
Okay. One more question on the 3P. And Kevin, thank you for posting the customer service information for contacting on the idle. Jennifer said we had, let's see, also if we had laid people right before getting the loan and we were not planning to hire them back, we have to repay the amount of the loan related to their wages, right? That's what her question is.
That is our understanding. Yes, we're going to encourage everyone to speak with their attorneys and their accountants, because when it comes to the forgiveness portion of the loan, again, we've not been given any guidance on that. We don't know how it's going to be calculated. We do know that when you make application for forgiveness, that your employee payroll has to be largely the same as it was for what the funds were used. If you have reduced your payroll substantially and you have not retained those employees, then that portion would not be forgiven. But I don't have any type of information as far as how they're actually going to calculate that. That is yet to be determined.
Thank you.
Amy, we see you're back and we get back to you.
Yes, I'm sorry about that. It's just been a struggle.
So you were just kind of giving us an overview of some of the other programs around the state. And I'd like to add on top of while you're speaking in case we lose you. But so you mentioned, what was it, 5 districts that don't provide revolving loan funds. And it sounds like they're all centered around larger cities. Is there some sort of reason why they don't provide loan programs?
Actually, there were 4, and it really just depends on their board of directors if they want to have an active revolving loan fund. Sometimes there's not enough business in those larger areas because there's so many local banks. So that has a lot to do with that over the years. And some of them have had programs over the years, and they've just not had the revolving activity. So they've actually returned those funds back to EDA and other program areas. And I do apologize for the connectivity. But back to the map, if everyone does want to download that map, and there's contact phone numbers for all the offices associated with those area development districts. So I strongly recommend you to actually reach out to those individual area development districts to see what their specific requirements are associated with their loan program.
Yeah, the real message is there's a lot of resources out there across the state, and it's up to you as the entrepreneur to really do the detective work, figure out what's available, start making connections to people like we have here, like Perry and Marilyn and Amy, and us here at the Small Business Development Center, where we can kind of, funnel you to the right direction. And it takes a lot of work, but collect all the resources you can.
Right, absolutely. And the myth, and I know that Perry went through some of the myths. There's very few grants out there for small businesses, as much as some of these websites will promote those and tell you those. Now is an opportunity, obviously, with a PPP to operate and function and actually get that transitioned into a grant in the future. But that myth that's out there, there's no free money when you really look at it. But we are here to help within our regions, and we want to try to help all the local businesses and small businesses to succeed within our district boundaries.
Yeah. Awesome. Well, any other questions, Tony?
No, it looks like you all have answered all the questions in the chat room. Thank you all for that.
Yeah, you guys have been really good. It's been awesome, despite all the little glitches we've had today.
Technical glitches, right?
Yes. Yeah, it's been very informative, and especially the big takeaway is that for me has been that the idle loan and the PPP has been on everybody's mind, but there's a ton of other stuff and other organizations and other expert like that we have here today that you really need to tap into to collect every resource you can to drive your business forward as we talk about the economy. Tony, anything you want to add?
No, I just wanted to say thank you to everyone for your time and your knowledge. We really appreciate you all, and thank you all for joining us today.
Thanks
Yeah,
for
and I'd
having
like
me.
Nice to see everybody.
All right. Bye, everybody. Thank you.
All right.
Thank you.
Goodbye.
Thank you all.